Well, good evening. I'm Chuck Vosberg from Next Home. This is my lovely wife, Pat, and we're being joined today by our guest, Kristin Eck from Next Mortgage. And this webinar's designed for two kinds of people: people whose homes were damaged in the storm, and for people who have maybe they want to buy a storm damaged home. So those are the two folks we're going to be talking to in this. And we're expecting this to be about 30 minutes or so. And of course, we'll stay on if there's any questions. We've got two options that nobody's talking about out there. So what we've been seeing out on the street is we've got investors that want to purchase properties, and of course they need to get them at a deep discount. So we've got that going on, and then we've got the scammer version of that, the blood-sucking bottom feeders, and and then we've got real estate agents like Pat and I who, of course, want to list your property and sell it and get retail, but nobody's talking about any other options, and there are other options. And so let's start off with, I think everybody's biggest question, Pat, is the 50% rule. Do you want to explain what that's all about?
Sure.
And she'll do it in plain English.
Yes. So the 50% rule is going to be it's from the website. You can actually, in this county, Pinellas County, you can go and it allocates what the county feels is an amount that should not exceed what it is to fix up your house. So a good example of this is I just pulled up one today, and it's on the beach. It's on the water. And the land alone on this, which of course, getting an appraisal would still be making sense. The land alone is about 1.1 because it's right on the water. But in order for this person to take care of their home, they would meet the 50% rule at 78,000. And
So that means they've got $78,000 that they can spend to fix this house.
correct. And this
Well, that
house,
doesn't go very far.
no, it's not going to go very far at all. In this house, the property itself is a bigger property, and the house that sits there now is 2,092 square feet.
And it's an
And
old house too.
yes,
So it's sitting right on the
it's an older
sand.
home, and this house is a one-story, totally damaged and not improved. And so not improved means that they have not pulled permits in a long time to do work. It has no upgraded kitchens, baths, flooring, etc. So
Mhm.
when a FEMA appraiser walks into that home, they are going to look around and possibly not even give anything over the 78,000, believe it or not. FEMA has, strict rules and guidelines about it. And they have a sheet that they use, which states exactly how much everything is. As a matter of fact, somebody did a roof last year on their home, and that's an improvement that's going to be used towards the 50% rule. And they paid only 10,000 for their roof, but FEMA had their roof as 14,000. So guess what happens? That rate of 10,000 goes up now to 14, which means that 14,000 is now going against what your 50% is. A lot of people don't understand that. So let's say you paid 16,000 for the roof, or 20. There's still, then it's going to go down to 14,000. That they have strict guidelines as to what the amounts are. Unfortunately, we don't know the amounts.
Yeah, and that's something that's a big question mark, is because FEMA is going to determine what these things should cost. And in the case of this property, it's built, right on ground level.
Right.
Well, the 50% rule says if the property is damaged more than 50% of the value of the structure, then it has to be brought up to current codes, which mean this house has to be raised up. It needs to be up on stilts to meet current code. And just that alone is between $200 and $250 a square foot to make that happen. So in Pat's example, you know, they're not going to get enough money to
No.
make that happen. And unless they've got money to kick in to make that happen, Or if they use one of the options that Kristen's going to talk about in a little bit, then they would be forced to sell. So that's why these options that Kristen's going to talk about are super important to people.
Yes.
And I want to also mention that one thing that a lot of people forget is, like, let's say this guy paid $500,000 for his house. That's This is two separate issues. You've got the land value and the value of the property itself. So this whole 50% rule is on the property itself, not the land, because the land is still there.
It's on the structure.
It's undamaged.
Right. Like this land is valued at, almost 1.1. So, what does he do?
Yeah. So a lot of people are going to be in a difficult situation. But one thing, for you guys watching this, don't make snap decisions while
No.
you're distressed. We've we've seen a lot of people already being taken advantage of. We we saw one person sell their property. They were just so distressed. Somebody showed up, and they're actually investors going around, and they've got a notary in the car with them, and they're going around buying properties. This unfortunate person, they sold their property for $250,000 cash, but it was worth 750 just for the land value. But they were very distressed, and that investor took advantage of them. So we say, look, we'd love to get your listing, we'd love to sell it right now, but listen to all your options first. Don't make a snap decision on this, because for most people, your house is your biggest asset, and a bad decision on your biggest asset could affect your financial picture for the rest of your life. So that's something we've been seeing a lot. And also, another thing that we're seeing a lot is people ask about the appraisal. So the FEMA's got their own appraisal, which, Pat, do you want to explain where people can find that?
Sure. If you go into the property appraiser, it's going to be a FEMA letter, and the FEMA letter kind of looks like this. So as you can see, that shows the land is 1,060,000, and then the property cannot exceed the 78. So when you see that, let's say this property was all finished out, you really probably should get someone who does FEMA appraisals and get them to come out and do it. We know someone who had the amount on her FEMA letter was 100,000, and the house was totally just renovated, everything last year, 2023. She got it up to $250,000.
Mhm.
So it really, it's like, do you want to spend, I don't know, 600 to 1,000 on a FEMA appraisal by, a private appraiser who does those? And the answer to that is, well, we can't say. It might be
Maybe.
just maybe.
It could save the day,
It
though.
could save the day. So like on the property that's only worth, the structure, not the land, but the structure itself is only worth 78,000. I don't know if it's going to be worth it, since it's not an updated home. So each individual person is going to have to make their own decision. It may be worth it just to see if they raise it a little bit, but even if they raise it to 100, you can't rebuild what you had there for 2,000 square foot home for $100,000. So
No, that's
no.
true. And a lot of people ask, like, okay, so I get this appraisal, I get the value brought up so that, maybe that makes the numbers work. How's that going to affect my property taxes? Because that's a natural next question, but it doesn't matter, and I'll explain to you why. So the appraisal is going to be on your property that you have now. Now, the property that you're going to have after the renovations are made and after it's brought up to current code, that's going to be a whole different property. It's going to be worth considerably more than the old one was. So your tax assessment is going to be based on the new structure. So the appraisal on your old structure, it really doesn't matter. So don't not get an appraisal. And believe me, everybody's out there saying, no, don't do it. It's going to raise your taxes. Listen, your taxes are going up anyway, because they assess it on the new structure, not the
Right.
old one.
Right.
So make sure that You just have to think these things through. Talk to some experts. Call us. We'll tell you anything you want to know. Call Kristen. We're going to give you all the contact information at the end, and we'll tell you anything you want to know. No strings attached. We're not looking to sell anybody anything. We're in the business of helping people. So, this brings up another good point here, and I'm going to bring Kristen on in just a second to address this. Cashing out now versus waiting a little bit, which is better? Some people are fed up. They'd like to wash their hands of it and just move somewhere else. And I understand that because this has been traumatic for people. And so people are saying, okay, so how long is it going to take for the values to come back to where they were before the hurricane hit? And we've got a lot of data on that because hurricanes have hit all over the state of Florida. Fortunately, it's been 100 years since we've had one like that here in Tampa Bay, but there's lots of data, and the data suggests it takes 14 months for the values to recover back to where they were prior to the storm. So, 14 months is a long time. Your holding cost will probably exceed whatever increase in equity that you get. But that's something that, again, don't make the decision based on your emotions. This is a math issue, and we can help you with the math. Just ask. We're happy to help. Now, Kristen, I'd like you to speak on this because there's a lot of people who they've got a home that's destroyed and they need to get somewhere else to live. And they're feeling like they're in a catch-22 right now because they've got a mortgage on the destroyed house and they want to buy something else to live in. And obviously they don't want to just dump the property at a great discount because they got a lot of equity there. So, Kristen, could you explain to us some options for someone who has a destroyed house, wants to buy something else, and then go on from there?
Yes, absolutely. And thank you so much for having me on here. It's wonderful just to educate the community. There's so many questions that people have, and so I think this is a great chance to educate. Um, what I'm going to do is I am going to share my screen and speak to a program that, and as long as everybody can see, give me a thumbs up.
Looks
Uh,
good.
Perfect. So this is meant to help people not only who own a home currently, but also rent. So this actually could be for people who were renting a home that was destroyed, or an apartment complex or a condo or whatever the case may be. And so the way that this would allow this to help somebody is as long as the area, which it is a declared disaster area, presidential declared disaster area. You have the ability to purchase a home using what's called a 203H loan. So a 203H loan is a version of the FHA program. And with this, it allows you to do 100% financing, so 0% down. And that allows you to purchase a home following standard FHA guidelines, but with just 0% down. Now, when it comes to somebody who's renting and using this, pretty much the only thing we have to verify is that the home was destroyed and they were displaced. So we're looking for evidence of pictures, things like that, that would support that, or, a landlord or something like that. And basically, you don't have to be a first-time home buyer. This is a standard FHA loan, which is typically meant for low down payments, but this is truly 100% financing. Now, when it comes to, it does have to be a primary residence on this as well. When it comes to somebody who owns a home, because there are a lot of those as well, that just, like you said, want to move on, don't want to stay in the area or that home, we actually can use the same loan program with 0% down. And when we qualify them for the new mortgage, we're not actually having to count the existing home. So we've got a home that is destroyed. We've got a mortgage on it, likely, potentially, maybe not. And we're looking to purchase our new home. And when we go to qualify you, you can do it with 0% down, and we don't have to count two mortgage payments against you. Not many people can qualify with two housing payments. So when we look at qualifying people in this option, again, we're going to be looking to make sure that that the house was destroyed. We're going to be looking to make sure that they're in some sort of negotiations or started the process with the current financing institution that holds the mortgage, if there is a mortgage, to have a determination of what they're going to do with that mortgage. It doesn't have to be finalized, but some sort of process has been started. And then we're going to be looking that to show that insurance, if with insurance claims, that there's been that any insurance money is going to go towards the fixing of the property that was destroyed. And once we can verify all that, we can still roll through using the 203H loan with 0% down, and allow people to purchase their new home, get into something while they work on getting through what's happening at the house that was destroyed. So
Well, that's
that's
really
really,
interesting, Kristen. Just to
yeah,
make sure that everybody understands this, what you're saying is that you can get another mortgage, and the mortgage that you have now on your destroyed house does not count against you. Is that what I'm
correct.
hearing?
That's correct.
Okay,
This is specifically meant to
that's
help
big.
people, yep, in disaster areas, still get financing and still have, find a livable home. And it is very big. It's very helpful. We've done some of these as disasters in the years past have come through. And there's a little bit of extra documentation, obviously, because we have to support some of the departing homes or rentals or whatever the case is. But it's well worth it because it does give people the opportunity.
Now, I've got one other question for you, Kristen. We've seen where a lot of lenders will have a forbearance program in a case like this.
Mhm.
And is that something that would be beneficial for people that are going to buy something new, like not a like new home, but a different home that's not destroyed? They could enter into some kind of forbearance program with their existing lender, which gives them a little bit of breathing room
Right.
while they get that thing on the market so that they can get a retail price for it instead of turning it over to an investor at a deep discount.
Well, and the idea is that while they're doing that and they're waiting on, any insurance claims or anything that is going to be paid out, that they don't have those mortgage payments, which is why we don't have to count that new mortgage and the old mortgage, because we're expecting that they're going to go into some sort of forbearance program to settle that loan. That process just takes time.
It does, and it's frustratingly long, especially when you're, living on your friend's couch or in a hotel or some other kind of accommodations that just are not ideal.
Right.
And we've just got thousands and thousands of people that are in that situation right now.
Hundreds of thousands. Just in Madeira Beach alone is 2,000.
Wow.
Yeah.
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 And
So,
people don't know that an option like this exists.
yeah, and I think that's really important. And of course, we'll make sure that everybody can get hold of you if they have any other questions about it. And I can tell you all, we've known Kristen for many years, and she's not going to try and sell you anything. She's someone
No.
that truly has the heart of a servant, and that's one reason why we really like working with her. So, Kristen, why don't we change gears for a second, unless you had anything else you wanted to
Nope.
mention on that?
Nope. Nope.
And there are a lot of people who want to maybe purchase one of these damaged homes because that is a good opportunity. Now, I'm not talking about investors because this isn't really an investor class. We do have videos for that. So if you want links to those, you guys that are watching, just let me know. I'll give you links. We've got tons of investor tutorials on our YouTube channel. But this is for somebody who maybe they'd like to buy a damaged house, fix it up and live in it because that's a great opportunity. And, you know, that's something that I think a lot of people may want because even though this once in a lifetime storm came through here and just demolished a lot of stuff, this is still a great place to live, and we're still lucky to live here. And
Yeah.
surely, lots of people would love to live here in paradise, even though we did have this happen. And the truth is that natural disasters happen everywhere, and this I've lived here in St. Petersburg for 59 years. I've never lived anywhere else. And this is a first in a lifetime that I've ever seen this, and chances are statistically it'll be the last, but you never know. So anyway, I've been going on and on, but Kristin, I know that there's some options for people because you can't just go get a regular mortgage on a property that's uninsurable. But I understand there's options for that too, aren't there?
There are, yeah. So there is renovation loan options, and this actually can be used not only on a purchase, but on a refi as well. So if for some reason on a home that you currently own that had damage and didn't maybe have flood insurance, because there's a lot of that out there, or you're going to use it maybe as an opportunity to do some things that you've always wanted to do, but now is the chance to maybe fix it up the way you really want it. There's renovation loans for refinance, but there's also renovation loans for purchase. So the way that the renovation loan works is it allows you to basically build in the work and the cost of the work that needs to be done into the mortgage. So you have a home that's got maybe a $250,000 purchase price on it. Let's just throw that out there. We'll talk about purchase first. And there's maybe $100,000 worth of work that needs to be done to get it livable because it's not in a current livable state. This could be just whether in a disaster area or not, to be honest, this is just the type of loan that it is. Basically, it allows you to build in that renovation into the financed amount. So our purchase price would remain at the 250. We would get the bids for the work that needs to be done by contractors to get to get it livable and do the things that need to be done for it. And that amount would be financed. So you're actually still able to do 3.5% down on an FHA loan if you are going FHA and it's a primary residence. Or there are options if it's second or investment, which I know this is not necessarily geared at that, but there are options for investors to build renovation, or maybe a second home. Maybe you've always wanted to have a second home in that area, and now's your opportunity to take advantage of that. So these guidelines follow the same guidelines that we would for a conventional or FHA loan, meaning the down payment requirement. But we allow the amount that needs to be the work that needs to be done to be financed. And so these programs, again, can be for primary investment or second. And it just depends on what needs to be done as to the route that we're taking. When the appraiser goes out to appraise the property, he or she is going to actually get the bids that are needed for getting the home to be livable or the work that's going to be done. And when they appraise the property, they will appraise it based on the work being done. These typically in normal scenarios close in about 45 days. I know getting quotes and stuff could be definitely different right now.
Yes.
So these
Mhm.
can take longer based on the timing of all of that. But once it closes, those funds that need to be held to pay out for the work that's going to be done goes into a escrow type of account, and as the work's completed, that's paid out, and then there is a final inspection done to make sure that the work is completed per the bids and the appraisal. So very great opportunity. Again, can be used on refinance as well if if the home couldn't possibly appraise right now with a standard appraisal for a cash out to fix things or do things that need to be done, but could be done on either the refinance or the purchase.
That sounds to me like it would be another good option for people who want to fix the house and then live there again.
Right.
So there's three good options. And I, Kristin, I don't know why nobody's talking about these.
Especially the third one, that's 203K
It's,
right now.
I mean,
Nobody's talking about the 203K.
I understand why real estate agents aren't talking about it because
Yeah.
we'd rather get your listing, of course, that makes sense.
Right.
But uh,
But we've seen so many people that that weren't in a flood zone. And now a lot of people were, obviously, so they're going to be getting that insurance money. But those people that
sure.
were in a flood zone that have a lot to remediate, or have a lot of other things that need to be taken care of, the refinance option is a great way. And it's a cash out refinance, so you're tapping into the equity. But typically, if a home is in a disaster state, we can't do a standard cash out refinance because the home has health and safety hazards.
Right.
So this
Right.
is the option to be able to keep your home and get it back to living status, and get it the way you wanted or had it before.
That
How easy is the process to go through the 203K? Is it 3 or 5 bids you have to get? How many?
So it depends on if you're doing how much you're needing to
Okay.
rebuild, and it's not, you don't necessarily have to have a certain number of bids. It's just that the contractor or person doing the work does have to be licensed and insured and approved.
Right.
of
Obviously, we want to
course.
make sure that whoever's doing work is licensed and insured if they're coming on your property and taking care of things like that. So,
Yes.
yeah, and the bids just have to be they have to be put in, and we have to have all that done before we can actually order the appraisal.
Is the list of general contractors, does the person get that from you guys?
No, I mean,
No,
really,
okay.
honestly, I mean, I can always check to see if certain areas have a list, but a lot of times people come with their own. And again, as long as they're on the up and up, then they're typically approved without an issue. And that process isn't long. In these scenarios, the longest part's going to be getting those bids.
Well, that's one area where Pat and I can really help because, I've lived here my whole life, so I know everybody in town. And over the years, we've accumulated a list of contractors and tradespeople and things that really everything that are people that we trust that we've used ourselves because we've renovated many properties ourselves. And, we're happy to share this information with anybody. We, in fact, I'm going to take screen back for a minute if it's okay
Yep,
with you,
I'm
Kristen.
yep, I'm good. I'll stop sharing here.
Okay. All right, great. So let me give you an example. We had somebody who a tree fell and it needed to be removed. They got a quote from somebody. They
Oh,
wanted,
yes.
what was it,
No.
$6,500?
A friend of mine had a tree fall on her roof. She got a quote from someone for 14,000. And
Oh,
yeah, you didn't know it was 14. And the guy that we know, he's an arborist. I mean, he's licensed, insured, $3,000.
yeah, because he's local. We know him.
Like,
He's not going to gouge people because he's a local businessman that he's still going to be here 10 years from now.
and you really do need to get people that you trust. I have people calling me or texting me all day for, vendors that we know,
Yeah,
our preferred providers that we have in our
we're happy to
database.
share.
And, just for the tree falling or,
Yeah.
and the difference in price. And not to bring this up, but she's an older person, and I think there's a lot of elderly being taken advantage of. There's
Mhm.
a lot, like we talked in the beginning, there's a lot of scammers out there right now. They might be licensed and insured, doesn't mean that they're not following their moral compass, though.
I'd like to add to that.
Yeah.
When it comes, Kristen mentioned that it's a good idea to use licensed and insured contractors. And believe me, that using unlicensed help is a false economy. It will cost you more in the long run. Believe me.
Yes.
But you want to have people that are licensed in the state of Florida and insured. So, and of course, there's a lot of people running around out there that are claiming that they are, but they're really not. So I want you guys to write this down. You can check anybody's license, any kind of licensed profession in the entire state of Florida. It's myfloridalicense.com. That's myfloridalicense.com. You can go on there, you can find out all the information and make sure their license is valid, make sure they're licensed to do the kind of work that you may want them to do, because there are different levels of contractor licenses. So everything's explained on there. One thing the state of Florida has done that's really great is make it easy to check up on these because we've had such a long history in time past of people getting ripped off by contractors in this state. And the Florida does not want that to happen anymore. And they've done a great job of really clamping down on that. So be careful.
If I could just add one thing to that too, the other day, I just
You're
was,
going to talk about permits, aren't you?
well, yeah, no,
I
I'm
knew
not
it.
going to talk about permits, but when you do have someone that you're going to hire and they give you their insurance paperwork to show that they're insured for up to $10 million or something like that, it would be a really, just because they have the paper doesn't mean that it's legitimate. It does not mean that it's active. It does not mean that they paid their premiums to the insurance. It would be a really good idea. Pick up the phone and call the company that's on there, or look them up even to get the correct number, and call them up and find out how much they're insured for, how long they've been in business. Although my Florida license will show that.
Yeah, it'll indicate that too, but that's a good extra step.
It is a good extra step.
And is it okay if I talk about permits?
It is. I'm known as the
Pat,
permit queen.
Pat will get on a soapbox like you wouldn't believe. So, listen, you guys,
The permit queen is right here.
most people don't like what I'm going to say, but just trust me on this. Don't do things unpermitted. You will get caught. You may wonder how I know. Because, back when I was young, I tried to slide stuff through. And listen, you're going to get caught, and you're going to get caught one of two ways. You're either going to get caught right away because, building inspectors are all over town right now because they're looking at work being done. So they're going to see stuff getting done at your place. But let's say they don't, you slide by. Well, when it's time to sell that house, if the buyer's agent is even slightly competent, they're going to look up all those building permits. And if you've got unpermitted work, you're going to have to get a permit after the fact. And in some, it's very expensive. And sometimes it's super expensive because if it's something that the inspector can't look at because it's finished, you're going to have to tear it out and start over. So believe me, it is not worth what little bit of money and hassle you save by doing things unpermitted. Do it legit. It'll pay off big time. Just now I'm getting on a soapbox about it. But
no, but permits are really,
it is good advice.
and it really is good advice. And to look at what has been permitted in a home that you're thinking of buying.
Yeah.
We had a young girl going to be, she was purchasing a home, first time home buyer, and there was no permit for the HVAC, yet the HVAC had, it was just installed. And basically, the homeowner said, oh, my friend is an HVAC guy. And we did it on a Sunday. Well, we asked them to pull an after the fact permit. And then the city or the county came out and looked at it, and it was cost of over $1,000. So the initial permit would not have been that much money, but they had duct work to do and a bunch of other stuff. So yeah.
Well, that reminds me, because if you have to do a permit after the fact, it doesn't have to be up to code back to when you did it. It has to be up to code to that time. And, the codes are constantly changing, and, it's not worth it. So Kristin, would you do me a favor? Put your contact information in the chat, because I want you to share it there. I'm going to share it in the show notes. I'm going to, in the replay, I'll make sure everybody, if you don't get it, just email me or direct message me any way you want. I'll get you in touch with Kristin if you want to talk to her about some of these finance options that might save the day. And of course, if you've got any real estate questions or anything at all, or need some vendors or recommendations or anything,
or if you need us to look at permits.
Oh, we're not pulling permits.
Not pulling permits, but look them up for you.
Yeah, we can look them up for you. Just let us know.
Yeah.
So Kristin agreed to stay around for a few extra minutes if anybody has any questions. We've got a fairly small group here tonight, so feel free to unmute yourself and you can speak if you've got any questions. We'll tell you literally anything that you'd like to know. Looks like Sharon has a question. Sharon, are you?
I'm trying to find some lighting that doesn't make me look.
We can see you now.
We can see you.
Hi, Sharon.
I have one question. We had to go to a birthday party and we've missed some of this wonderful webinar. Are you going to repeat it, or is it recorded?
We recorded it.
Watch it later?
Yeah, we recorded it because a lot of people let me know that, oh, they've got a prior commitment or
Yeah.
something. And we do want to share all this. By the way, it's really good to see you. I haven't seen you in years.
Yeah, I
You look
know.
great.
Oh no, I don't. But we were at something on Indian Rocks Beach for a friend of ours. It was it was a whole little party thing, but
Mm,
we used it as an opportunity to learn a little bit about the city, as well as then
yes.
it was her birthday. We've been doing a few things. Indian Rocks Beach has been great, telling people a lot of things and trying to have outreach programs and food and stuff.
Yeah.
So,
Our
but
local and
I
state
so
people are great.
yeah, so we can see it by going through your Facebook, or are you going to have it on
Um,
YouTube?
I'll I'll direct message everybody that
Okay,
was on here, and I'll announce it on my Facebook. I know you and I are
great.
Facebook friends, and I
Yes,
think you are with Pat too. But
yes, yes.
I'll make sure everybody knows about it. It'll probably take me a day or so to kind of edit it and
Great.
snip it down to just the facts.
Did you
can
have any questions, Sharon?
I do have one other, but I don't know if I can articulate it well. In terms of when you're supposed to insure your property, for flood, um, to within 80% of the property, that is for the structure, not for the structure plus the land, right?
Correct.
Because obviously they're not doing anything for you to do with the land.
No,
So
because
No.
it'll dry out.
if an insurance agent says something like, well, it's worth more than you have it 80% insured for, and they quote you the price for the land as well, that's not
Mm,
accurate, right? It's only the house.
you are right.
Okay, good.
Yes, the structure is separate from the land.
Right,
Because
right. I
even
think
if the
that's
structure's gone, the land will remain.
exactly.
Yeah.
That's what I knew it to be, but seems to be a tactic to say, well, we're not sure if you're not going to get penalized because you've only got this much insurance,
Mm,
and yet you're on the county site, it says it's worth this much, and so you don't have 80% of that much. And I said, that's not right, because that's not the structure.
yeah, what's on the county for the assessed
Right.
value is the combination of land and improvement.
Right, exactly. So then if we have within 80% of what the structure is or more, then we're
Mhm.
well within our proper rights. Is that correct?
Yes, yes. And I got to tell you, everybody hates insurance until they need it. I know
Yeah,
I fall into that category.
but unfortunately, insurance loves to take your money until you need it back.
I know. And, that brings up an interesting other point, Sharon, is that a lot of people don't realize that you've got a right to hire your own adjuster,
Yeah,
called a public adjuster. And if
right.
anybody needs recommendations on those, we've got a few that we trust.
Yeah,
And
great.
that person will assess the situation, and they'll actually negotiate with the insurance company on your behalf.
Right.
And because they're experts in that,
Right.
I can give you an example. We had some damage here at our house, and the insurance gave us, I think in our case, oh, here's your check for $16,000. See you later. That's good. Nice
No.
doing business with you.
We had an adjuster, by the
So
way,
we had an
from the
adjuster,
beginning.
and what are we at now? $32,000, something like that.
Something like that.
More than
And what, did
about
you do that
double.
afterwards, or did you do that from the start? Because
I did that from the start. I
Yeah.
hired a public adjuster because
Yeah, because
I'm not going to
you
say
knew.
anything bad about insurance companies, but insurance companies are not your friend.
Right, they're in business.
They're in the business of not paying out claims,
Right,
and we've never had a claim. And so I just didn't want to deal with it.
right.
I knew, I think they take 10% or whatever it was.
Right,
I don't
They
remember.
do, yeah,
now.
Yeah, whatever they
And
take
it's
is.
so worth it because
right.
I don't have to handle the phone calls. I don't have to watch. Maybe I'm saying something wrong that I shouldn't have said,
Yeah,
Yeah, because we don't
So
know the rules,
I don't know the rules.
and we don't know our rights.
And right, and you don't know your rights, but they do. And
Yeah.
for me, I think, I'll be honest with you, 100% of the people need to hire public adjusters and not go it alone.
Mhm.
Right.
That's just how I feel. I mean, some people may think that they've gotten a fair deal from their insurance company, and that could be true. I'm not going to say it's not, but I mean, look at our case. Okay, here's your check for $16,000. Well, I can't get a roof even for that. Never mind
Right,
the
right.
interior damage that
Yeah.
happened, you know? So what
Yeah.
are we gonna do with that, you
And
know?
that 10% of the double that we're getting
Yeah, it's
because
like
of it is
nothing.
just a tiny amount.
Yeah.
Yeah. Yeah. That's yeah, I'm feeling that too. I was thinking maybe to get the public adjuster to fight if the amount isn't high enough, but you thought
I
getting
did it right from the beginning because I did not want to deal with it.
Well, that was another thing is that, we're kind of busy and Pat just didn't want the
Sure.
extra stress because,
No,
Right.
it takes a lot of time to deal with the insurance company. We'd be
Yeah.
better off doing our actual
Doing
job.
your jobs, right.
Yeah.
I have a number of friends. I'm asking not just for myself, but for so many
Mhm.
friends. And they're
Good,
all
good.
same kind of little comments and things. It's as though they're trying to encourage you to lower your expectations in advance.
Yeah.
You
And
know, so that then they can hit you with a low mark and you won't mind
yeah.
so
somehow.
Sharon, you have our phone number. I'll give you mine and Chuck's.
I will DM Chuck's.
Yeah.
Is that
Perfect.
okay?
Feel free to
Yeah, because you can share our information and they can call and ask us anything.
Oh yeah.
Yeah.
And we'll try to get them the information or tell them, point them in the right
Mhm.
direction.
Point them in the right direction. That's
Yes.
Yeah.
wonderful.
Give
Wonderful.
them, yeah, give them the name of the adjusters.
And then, as you said before, one other question, and then I'm sure other people have questions. I don't want to hog you. The thing about the 50-50 rule,
Yeah.
you said it can be useful if you need to get,
An appraiser.
yeah, an appraiser, exactly.
Yes.
Yes, thank you. An appraiser to help you bring the price up a bit if it's looking like FEMA's undervaluing it.
Yeah. And
And
generally
you're
speaking,
appraising
they
it.
are.
Right.
It's been our experience from what we've been seeing these past few weeks is that in most cases, it is pretty well undervalued. Not crazy under, but
Mhm.
pretty solid
It just
percentage.
depends on the property. Like I said, that woman had the FEMA letter. And if you're not familiar with where to get your FEMA letter, I can tell you, we can have a conversation about
Yeah.
that.
Okay.
And the FEMA letter will show you what, they're going to give you. And if you exceed that amount,
Mhm.
then you've surpassed the 50% rule, which actually is 49% now. It's not really
49.
50%,
Depending on the municipality.
depending on the
Right.
municipality.
Yeah.
That's true.
Yeah.
Yeah.
So I
Yeah.
think it's a really good idea to get it, like her letter said 100,000 and she went and got her own appraiser and it came out to be 250.
Right. But now, does what you're insured for, does that cross over into 50-50 rule, or is that just relative to the insurance, separate from whether or not you decide to use it all to repair? Like
the
if you're insured for X amount.
The answer to that is it depends.
Uh-huh.
But
Right.
I think, just based on what I've been seeing, in most cases, the extent of the damage is beyond the limits of the insurance anyway.
Right. Okay.
So it's just going to max out at, in most cases, $250,000.
Mhm. Even if you didn't pay for 250, it's going to max out.
Well,
at whatever you paid
it depends
for.
on what your policy says. And,
Oh, I
and
see.
I should also give you the disclaimer that, we're not licensed insurance agents.
Right. Right.
So, it's
You're
we're
only-
just telling you what we know. And
You're only speaking about what you know and what you've seen.
yeah, so definitely speak with your insurance agent
Sure,
about that.
sure.
And
Sure, you're just giving people the right tools to use to speak
Right.
to them.
yes,
Yeah.
exactly.
Yeah.
So anybody else have any questions before we wrap it up? This is really good. Great.
I do have a quick question. My name's Janie. Can you hear me?
Yes.
Yes. Yes.
Hi, I live in Dunedin and I have a cute little house. And I'm wondering about the house is totally gutted right now. It's down to the
Mhm.
studs.
Mhm.
They gutted it up to 4 feet high. And I
Good.
thought, I'm going to do the drywall. I'll throw some floor in there. And maybe because everyone wants to live in Dunedin,
Yeah.
I figure if I put all this money into putting a kitchen in and a bathroom, a lot of people move into a home and it's got all these beautiful features and a great kitchen, but they want it to do it their way.
Yes.
My point is like, why would I even put a kitchen in? Maybe I'll sell it just with the drywall and the floors and leave it as it is and sell it for a little bit less and let whoever wants to buy that house put their own kitchen in. I don't, again, there's so many options. I don't know if
Oh, I'm so glad you brought
it's
that
not
up.
right or wrong, but I just thought, what if I just sell it halfway done? I don't know if the bank will allow me to do that though, because they still have a mortgage.
That's going to be up to the lender, of course. But
Ah,
I will tell you
okay.
this, that most home improvements only pay you back a percentage of what you spend. So kitchens
Right,
in particular, and they, you may spend $50,000 on it, but it only raises the value of the house by 35,000. So in that
right.
case, you're like, well, why bother doing it and going through all the hassle? So I think you and I are friends on Facebook, but
I
uh,
friended you today because, and I
contact
do want to
me.
say this before we go on. Thank you so much for having this because this is so informational
Oh,
and
there's so many people hurting.
I
It's just,
appreciate the
we had
time
to.
and the information. I do appreciate it. So thank you for that.
Hey, by the way, I think I accidentally deleted your friend request because
Oh,
there was
no.
somebody I accidentally deleted right before we started this.
It could have been me. It's Janie.
So
Jane,
if
yeah.
if
I
I
can,
did, I'm not dissing you. Just redo it, please, and I'll.
okay, sure.
I just, I got fat fingers. I don't know
No,
what's.
I do too. I do a lot of that a lot. So I appreciate. Thank you.
Yeah, and I'll give you Kristen's information and
Okay.
anything else. I've also got a sheet that gives you the percentages on how you get paid back on stuff.
Right.
Certain things like a front door and a garage door, you get that money
I
100%.
know, a garage
But
door.
most
It's like
things you don't.
crazy.
Wow. Interesting.
It's
Yeah.
Yeah,
crazy.
front door is important. So that's all good information because I'm
Yeah.
still gathering information as I make my
We'll
decisions.
share all that with you, and that's a lot bigger discussion. So maybe we could talk one-on-one, and we can kind of walk you through the process of selling it as is.
You want our
All
phone
right.
number, Janie? I can give you Chuck's number.
Yeah, our telephone number is 727
Okay.
743 1740.
Perfect.
And as long as we're talking about telephone numbers, Kristen, would you mind sharing yours?
Yes, absolutely. I put it in the chat, but my phone number is 407-617-1874.
Very good.
Perfect. Perfect.
So,
And as I mentioned, please share, pass the word around. Even if people are renting, like this is a great opportunity for those people to,
mhm.
get into something that, unfortunately make lemon. What is it? Make lemonades out of lemon.
Well,
Yes, right.
yeah,
And it, right.
I was thinking that, for folks that are renting, this might be a golden opportunity to get into their own home. I mean,
Right.
the circumstances sure aren't good, but it it might turn out to be a good thing. Doesn't hurt
Chuck,
to talk.
Chuck,
Yes.
could you just say your number one more time?
Yes. 727 743 1740.
Thank you.
But give us a call. I'll get your contact info and I'll send you over that sheet with how the renovations pay off in the end.
Great.
Well, that's awesome. Kristen, I can't thank you enough for coming on here. You're such an expert and for sharing these options that nobody's talking about.
You guys
And
as well for putting this on.
uh, okay, last chance if anybody else had any questions or if anybody who asked a question has a follow-up. Otherwise, you know how to get hold of us, and we're always happy to help.
Thank you. Thank you. And I
Yeah.
will get in touch with you DM and ask you how I can watch
Yeah,
it or listen to it.
absolutely.
Thank you. Thank you
Thank
so
you,
much.
Sharon. It
Thank
was so good
you.
seeing you again.
Bye.
All right,
Bye.
y'all. Keep smiling out there. I know a lot of people are hurting right now, but we're all going to be okay at the end of it all.